Hey everyone, it is Julie here with TipRanks. Once again, I am joined by Jason Meshnick, the CEO from TheStreet Pro. Jason joins us with 30 years of experience from Wall Street, fintech, financial literacy, and more. So, Jason, thank you once again for joining us here today.
Thanks for having me. It's always fun.
Absolutely. Now, you put out an article this morning called Three Left Behind Stocks That Could Shoot to the Moon. So, today we're going to jump into those three stocks, kind of some of the reasonings behind them and everything. But to start off, I would love to hear just what you meant by left behind and what was the big picture inspiration for highlighting these stocks right now, given the market conditions we're seeing in early 2026.
Absolutely. It's a great question because I think this market has become very narrow. The kinds of things that people talk about, Helene Meisler, who we talked about last week, she has a term for it. She calls it the others. So in the case of the S&P 500, you've got the Mag 7, right? Those big cap stocks that we all talk about, that we know everything about, Nvidia, Apple, et cetera. But then there's the others, the things that people don't really think about, even though we might be using those products every day in our lives, we just don't think about them as investing as things that you might invest in. I think one of the reasons for that is that we're in this world where people are either in an index fund or they're picking stocks that can generate lots of alpha. And so the stocks that people think about that are generating alpha all have two letters in common, and they are all AI related. And then everything else is just something that you're supposed to buy in an index fund, I guess. So that's really what we mean by left behind stocks. They haven't participated in the big gains that we're seeing. I mean, the S&P is, right at all-time highs. And a lot of these other stocks, the others are just not. They're all lagging. They're being left behind.
Sure, yeah, flying a bit more under the radar. So excited
Hmm.
to go through those today. We're going to jump right into the first one that you highlight today, and that is Coinbase. Now,
Yeah.
the stock is down sharply from its mid to late 2025 highs. I had a look at this today. I didn't realize it had dropped so much, but it's lost about 50% since those highs there and a bit low buzz surrounding it. So why do you think it's being overlooked, and what signs do you see that the business is actually kind of thriving behind the scenes?
Yeah, well, one thing I'll say about Coinbase is that it does this periodically. Now, this is the biggest drop in recent history, but I looked back over the last few years and it's had 30 and 40% drops. So we're over, I can't remember what the exact number is, 55% or so. That's a big move. Um, and so I decided that it was worth taking a further look at because I don't think that the crypto story is over, right? It might be that, crypto, they talk about having seasons, that we're currently in a crypto winter, and that the crypto winter is supposed to last X number of days, or that there's these cycles. And it might be that these cycles are changing right now. But I just don't think that the crypto story is over. And Coinbase really is one of the premier names in that area. Um, so one of the things, so I'm actually out in Utah right now at the Sundance Festival. So there's no skiing going on right now. There is skiing, but it's pretty bad. But instead, I've had the opportunity to go to several parties and meet a lot of people and talk to people. And one of the experiences I had was I met a number of people from Coinbase. And what I was really interested to find out from them was, what's the vibe like? Are they happy to be there, or are
Yeah.
they, what's the tone like, right? Because I've worked at companies that were on the way up, and those were really fun to work for. Lots of money flowing around and people doing cool things and lots of investment happening. And then I've been at companies that were more mature and maybe on the way down. Those are a lot less fun. And so I wanted to know, with Coinbase stock down so much, what are people saying at the company? And you know what? They're all pretty happy. They're all excited. Maybe that's just what they're saying because they're in Utah. But these are all pretty optimistic people. So I felt like that was a really good sign for this industry going forward. And the other thing is, it's not just anecdotal having talked to people. Coinbase is actually hiring. I read somewhere that they're looking to add, I think it was 1,000 jobs this
Oh, wow.
year, and so that would be approximately 20% increase over their current staffing levels. So this is a company that's investing, that sees themselves as being on the way up, and not a company whose stock price is off by 50%.
Yeah, especially when we do see a lot of companies announcing layoffs and streamlining nowadays. So that's definitely a positive signal from the inside there. Now you mentioned
Exactly.
the overall crypto market and stuff too, and you described coin in the article as a potential sentiment indicator for the entire crypto market. So what would need to happen, with Bitcoin and the different crypto spaces, maybe regulatory changes for the stock to really kind of take off from here? And what kind of upside do you see if it does?
Well, yeah, that's a great point because that is one thing that's been happening over the last year, and certainly this administration is very crypto friendly, right? It's one of the reasons why they were elected was a lot of money flowed in from people who saw them as being more crypto friendly than the alternative. So I think um, the more regulations that go that are pro crypto, certainly going to benefit Coinbase and certainly going to bring more money in. Most importantly, it's going to bring in institutional money. And the reason why we want to see institutional money um, in an industry or in an investment is just like what we talked about last week. Doug Cass was talking about how you want stability and institutions bring stability, right? They come in with lots and lots of money and it just decreases the amount of volatility. Now, some of that volatility you may lose on the upside, but more importantly, you lose it on the downside. And once people are more willing to invest in, or sorry, once people see volatility decreasing, they become more willing and excited to invest in something. You might see it in a 401k and in other ways besides just being in an ETF. So I know that there are futures trading and things like that that really open up this market and will help it mature. And I think that those are all things that will add additional legitimacy to the market overall and bring in people who currently might be crypto skeptics.
Fair. Yeah. Now, you mentioned Eileen Meisler again in this article, saying that she noted the stock was oversold with a possible support around 212. So, from a data standpoint, like what are some of those key technical and fundamental signs that you think investors should be watching for?
Yeah, so right now, by almost any measure in the medium term, short to medium term, Coinbase is in a downtrend, right? A downtrend is marked simply by declining highs and declining lows, right? Intermediate highs and intermediate lows. And so we see this thing basically it looks like a staircase going down. And longer term, there's a little bit of high volatility and some big consolidation and lots of different things going on. But what we'd really like to see from the standpoint of technical analysis is just that it stops going down. And I know that sounds
Simple
kind
enough.
of
Yeah.
obvious, right? Yeah, just buy stocks that are going up. But
Yeah.
really, some of the things that we want to look for first is some kind of selling capitulation, right? So maybe high volume, um, and so we see that lots of the what they call weak hands are getting blown out of the market. But the other thing that's probably bigger is that we want to see it go sideways for a little bit, right? Just prove to us that the sellers are done and that buyers are starting to come in and starting to get interested. And that might take, it's not a 1 day thing. It's not a 2 day thing, right? It's probably more like a month or two or 3 or 6 months, right? The bigger the base, when it finally does break out, the bigger the subsequent move. So that's really the kind of thing that we'd like to see fundamentally. The other thing I took a look at, people are just not talking about Coinbase. So, and we want to see some of that happen. Now, I wrote a paper a number of years ago. I created a volume algorithm called normalized relative volume, and one of the things that I looked at, and I found that securities that were being traded not less than they normally are, right? So their relative volume compared to their own history, when that relative volume is low, those tend to be pretty good times to buy, right? Those stocks tend to outperform. Um, and so what we're seeing right now in Coinbase, if you blow it out to not just the volume is relatively low, it doesn't mean it's absolutely low, right? Coinbase still trades more than a lot of stocks, but relative to its own history, it's relatively light right now. And then the other piece was no one's talking about it. So I did a Google search. I went to Google Trends and I just typed in Coinbase, and it's at a fairly low level for the last 5 years. So no one's Googling Coinbase,
Yeah.
right? The other thing is none of our contributors are writing about Coinbase on the Street Pro. So I had to dig it out. I'll probably talk to a couple of them and say, hey, could you start writing about
Yeah.
Coinbase because I'm interested. Yeah, people don't really want to know what I think of it. People want to know what they think of it. Um, and so, but that tells me that our our subscribers aren't really talking about it either, except for the ones who follow Helene and have been asking Helene about it. It's not the kind of stock that Helene's going to normally follow either. She's not really into crypto, but when people ask her about it, she absolutely, gives great opinions. So yeah, so no one's really interested in this thing right now, and I really think that they should start taking a look.
All right, I like it. And then moving on to our second stock, uh, kind of similar in the type of company, if you will. We're looking at SOFI here. This is one that's rooted in potentially some AI-driven growth. They have more focus on
Mhm.
fintech and everything there. And they were named a top pick for 2026 by Sarge or Stephen Guilfoyle there. And we've mentioned him before in the last video as well. He has an impressive track record, picks like AMD and Palantir. So, what brought this stock to his attention? Why does he think some of these recent analyst ratings are kind of off base? What's making him confident in this one?
So Sarge is great. I'll just say a couple things about him first. Last year and the year before, he picked Palantir, and I think that Sarge, just based on numbers of people who read his articles, when he writes about Palantir, he has become probably one of the most important independent voices on Palantir across Wall Street, right? He doesn't work for a big bank. He's an independent guy. He works with us. And so when Sarge talks about Palantir, people listen. And he's been right. He's had the stock in his portfolio since it was under $10. So now, after 2 years of having Palantir as his number one stock pick and making, what are the numbers? 340 and
They're
140%
big.
year after
Yeah.
year, right? Just great numbers. I didn't follow him. I should have. Maybe this year I will follow him into SoFi, but he sees this as being one of his big picks. He's going to come in and not say that it's going to shoot the lights out the way that Palantir did, but he probably has those same high expectations for it, as long as the market continues to move higher. And I know that he is bullish on the market right now. Um, so why? His big thing is he feels that this is an AI play, and Sarge, he's bullish on AI, and why not? What he says is that as a financial services company, this is one of the industries that is going to benefit most from adoption of AI, and so he sees there being significant compression in some of their expenses because of this. And so their margins will expand, and they'll just be able to become a much more efficient business than they have been, and that should benefit shareholders down the road.
And so, how do we see this AI like transforming the financial services industry? Like, do you have any insights on that? Like, it's obviously a huge, I know it's
Yeah.
probably a broad question, but where do we see SoFi going with this?
It's a broad question. I don't have a great answer, but I'm going to give you an anecdotal answer.
Fair.
I have a friend who is a former portfolio manager at Janus, and I ran into him in the street one day, and he said, "Oh my God, I got to tell you about this story." A friend, or I think it was a nephew of his, who is a young guy entering the industry and was analyzing a company. I don't remember what company it was. He built his own spreadsheet, very traditional kind of analysis, right? Where he goes in and takes all the financial data and builds a spreadsheet and creates his own assumptions and figures out what he thinks the stock is going to do in the future. Okay, so my former portfolio manager friend takes a screenshot, okay? It doesn't take the whole spreadsheet, literally just takes a screenshot and plugs it into the free version of ChatGPT and says, "Hey, what do you think of this?" And ChatGPT came back with this incredible analysis of the spreadsheet, of the assumptions that the spreadsheet or that the ChatGPT felt that the analyst had made, and was like really accurate. And so my friend was incredibly impressed with how good this thing was. So I think when it comes to AI, you can't trust it 100%. But once you have it locked down enough and understand what it's going to do and where maybe it hallucinates, or maybe you have it locked down so it doesn't hallucinate, well, I think the sky is kind of the limit. It's certainly going to help with, it can help generate stock lists like we do on TipRanks. It can certainly help with the ideation process, but it can also help streamline things. It can help streamline customer service, give people better answers than they might be getting right now in more quickly. So I just think there's a lot of opportunity there, and I think we'll see over the course of time what happens.
Now, talking about the SoFi stock, Sarge did throw out a medium term price target of $36 and longer
Mhm.
term to the moon. So,
To the
what key
moon.
milestones or earnings catalysts and stuff do you think would get the stock moving that direction?
Well, I think a big one is we have earnings coming up on Friday. So we'll really see what happens. I think the number they're expecting is 11 cents. So if they beat that and if they show solid growth numbers, then that's going to be that'll be a really great first start. So we'll look there. It'll also be interesting to see what the MD&A, right, what the management says as far as what they say for the future for their stock.
So all eyes on SoFi Friday. Got it. Now, the third stock I really enjoy because it's very different than the first two, right? The first two we have crypto and finance, AI. The
Mhm.
third one on your list today was Hershey. So this feels like a classic, unsexy defensive name. Wide moat, steady dividends, real strong balance sheet there. Why has Wall Street maybe been asleep on this Hershey stock while everyone's focused on these AI and growth ones?
It's the kind of stock that our grandparents would have bought, and the rest of us are just buying lots of chocolate, but we know nothing about the stock. Um, so yeah, I think it goes back to what we were talking about earlier, is that everyone is just indexing, right? If you're going to buy Hershey's, you're going to buy it through an index. It's a member of the S&P 500. It's a relatively small constituent in the S&P 500. But what people are doing is they're going and they're buying the sexy stocks, right? They're buying the technology companies, the AI companies. Hershey, to my knowledge, is not an AI company yet. Uh, until they change from Hershey's.com to Hershey's.ai, it's probably going
Yeah.
to remain in obscurity, relative obscurity. Um, but so yeah, it's one of these stocks that Peter Lynch, the famous Fidelity portfolio manager, said it's the kind of thing that we should be looking to buy. It's a way of diversifying your portfolio. And right now, when the market is so concentrated among those AI companies, Hershey is the kind of thing that could do better, right? It's a defensive play. It's, you know, probably a little bit undervalued. It has a 3% dividend at a time when the S&P 500 has a dividend yield that's significantly lower than that. And so for people who are looking for income and looking for a little bit of safety, perhaps they diversify away from their AI stocks, the NVIDIAs and the stocks with, incredibly high PE ratios, almost unjustifiably high PE ratios, and into something that's much more safe and secure. So it's kind of the case with Hershey. It's just a traditional company, right? That is priced right, has strong ROE and growth and a dividend yield. So those are some of the reasons why that stock makes sense.
And in the article, you do mention that the company is currently basing there, and that there could be potentially some near-term selling, but then we could see the shares break out. So again, what kind of catalyst would you be watching for on this stock to see it tip in that direction?
Yeah, so I think the big one, and this again, I'm just going to continue to cite Helene because I just really enjoy her work. Helene has noticed that when Nvidia and the Mag 7 stocks, or I guess a slimmer list of the Mag 7 stocks more recently, when those stocks are not the big leaders, right? When they kind of take a break or decline a little bit, what seems to happen is the others start to move higher, right? It's like money's either saying, "Hey, we're going to go after Nvidia," or money says, "Hey, we're going to go after everybody else." So
Sure.
I think what you'd want to see is a broadening out of this market where people say, Nvidia maybe is a little bit overdone. Um, and let's start to invest in some of the other of those other securities, and a Hershey is something that could benefit from that. Taking a look at that base, we talked last week about the measured move, and I think Hershey's base has a depth of something like 50 points, right? So you could see a 50 point, or around, what is that, like 30% move higher when that stock finally does break out. So that's something I'd be looking for there.
Yeah. That's exciting. Kind of back to basics from all the exciting AI ones to chocolate, right? How can you go wrong?
Exactly,
Now,
right? Everyone should have a little
yeah.
sweetness in their portfolio.
Exactly. Valentine's coming up and everything. So, to wrap it all
Exactly.
up, would you say there's kind of a common thread that you noticed between these left behind stocks that kind of made them stand out as opportunities?
Yeah, that's a great question. Um, yeah, what is the common thread in them? I think, well, so they're all Coinbase and Hershey are in the S&P 500. SOFI is one that people are talking about being added into the S&P 500. So that's a potential excitement area as well. None of these stocks seem to be loved by the analysts, too, right? And so I think that's a big thing. We all talk about wanting to buy stocks that are loved by analysts, right? Because the analysts are supposed to be the smart people in the room, and we're supposed to follow them. But the fact is, when everybody has bought a stock and when everyone is bullish on the stock, there's no one left to buy it. So
Yeah,
when you have these stocks that are down and out and left behind and ignored, well, that might be the time to buy, because the next step is not for more people to pile on and say these are bad companies and bad stocks. There's People are going to start changing their mind, right? There's what they call the smart money on Wall Street. And the smart money are the ones who are going to start accumulating these stocks. As these stocks base, it's the smart money that's actually stepping in to buy. And so I think that's what we're hoping to see. And I think that's maybe what the common thread is that these are kind of unloved, left behind, ignored companies that hopefully will start to get some love as we go in towards Valentine's Day.
I like it. So we got to take a chance on some underdogs here and show them some love.
Exactly.
Perfect. Well, to all the viewers, we'd love to hear your comments on what of these three stocks you would put on your watch list. So let us know in the comments down below. And Jason, thank you again for joining me today. We'll see you back here next week to talk about what's going on then.
Sounds great. Thanks, Julie.